Ladies and gentlemen, it is my pleasure to welcome you to the Business Studies channel. In today's fast-paced and ever-changing business world, it is crucial to stay up to date with the latest trends and developments in the industry. This channel is designed to provide you with a comprehensive understanding of the fundamental principles and concepts of business studies. Whether you're an aspiring entrepreneur, a business professional, or a student, this channel will equip you with the knowledge and skills necessary to succeed in the business world. From marketing and finance to management and strategy, we will cover a wide range of topics that are essential to building a successful business. So, join us on this journey of discovery and learning as we explore the world of business studies. Whether you're looking to start your own business or advance your career, this channel will provide you with the knowledge and skills necessary to achieve your goals. Thank you for joining us, and we look forward to helping you succeed. What is accounting? Accounting is a process of recording, classifying, and summarizing financial transactions to provide information that is useful in making business decisions. It involves the systematic recording, reporting, and analysis of financial transactions of a business. The primary purpose of accounting is to provide financial information that is useful in making informed business decisions. This information is used by business owners, managers, investors, creditors, and other stakeholders to understand the financial health and performance of a business, and to make decisions about future investments, financing, and other business activities. Accounting includes various subdisciplines such as financial accounting, managerial accounting, auditing, and taxation. Let's discuss about accounting process. The accounting process refers to the steps and procedures used to record, summarize, and report financial transactions of a business or organization. The accounting process involves several activities, including 1. Identification of transactions. The first step in the accounting process is to identify and classify financial transactions, such as purchases, sales, payments, and receipts. 2. Recording transactions. Once the transactions are identified, they are recorded in a systematic manner in the accounting system. This involves creating journal entries, which are a chronological record of all financial transactions. 3. Posting transactions. After the journal entries are created, they are posted to the appropriate accounts in the general ledger. For trial balance, at the end of the accounting period, a trial balance is prepared to ensure that the total debits and credits are equal and the accounts are balanced. 5. Adjusting entries. Adjusting entries are made to update account balances and ensure that the financial statements accurately reflect the financial position of the organization. 6. Financial statements. Once the adjusting entries are made, the financial statements are prepared, including the income statement, balance sheet, and cash flow statement. 7. Closing entries. Finally, closing entries are made to transfer the balances of temporary accounts to the retained earnings account and prepare the accounting system for the next accounting period. The accounting process is a fundamental aspect of any business or organization that involves the recording, summarizing, and reporting of financial transactions. It plays a critical role in providing financial information that helps businesses make informed decisions and ensures compliance with regulatory requirements. Overall, the accounting process is essential for the efficient and effective management of financial resources. By providing accurate and timely financial information, it helps businesses make better decisions, identify areas for improvement, and manage risks. Therefore, it is crucial for businesses to have a sound accounting system and qualified accounting professionals to ensure the accuracy and reliability of financial information.